What is going on, guys? It's Will Kelly here with Military Lawn Cuts, where my wife and I have built a successful lawn care business that did close to $600,000 in annual sales last year. And we are planning on opening up a second location here in the near future. But in today's video, I am going to be sharing with you 3 secrets that business owners and rich people don't want you to know. Also, we're going to be going through the ESBI quadrant to kind of give you some background and insight to a deeper level of thought process when it comes to entrepreneurship, owning a business, and becoming wealthy. Stay tuned. So after this video, hopefully my goal is to open up your mindset just a little bit, bring value to you, to hopefully educate you on some of these subjects that we weren't taught in school. So behind me, I have the ESBI quadrant, and basically what this stands for is the employee, a small business owner, or a specialist, a big business, and an investor. So I'm going to break down the tax brackets or the tax percentages that each category falls under. And I'm going to show you one of the true secrets of becoming wealthy and being a business owner is the rich don't pay taxes. And I'm going to show you here why in a minute, okay? So in the employee quadrant, generally speaking, employees generally pay around 40% in taxes, okay? Now this is your W-2 positions, CEOs. If you find yourself in the E quadrant, you will be paying around 40% in taxes, okay? Now, if you go and decide to start your own business or your own specialty, you can generally find yourself in around a 60% bracket, okay? This is definitely the highest taxes quadrant that pays taxes. So definitely keep that in mind if you did want to start your own business. Keeping it small, keeping it that specialty, you're going to pay a lot in taxes when it comes to the IRS and the government wanting its cut and share, okay? When you make it over to this side of the quadrant, this is when things start to begin to change, okay? Now, when we say big business, what does that mean? That basically means a company that has over, generally speaking, 100 employees. Now, there's a whole range of that, but generally speaking, a big business is one that is providing a lot of jobs for people or housing, a lot of housing for people. So over 100 employees is a good sound number to get yourself into that category of becoming a big business. Now, what are their taxes on that side? 20%. So again, as you can see, employee 40%, small business or specialty 60%, a big business is 20%. Now when you get into the investor quadrant, okay, now these are your funding, your big capital, where people are literally sending them money and they're taking that money and they're going out and investing it. Okay, now this category pays 0% in taxes. Okay, now each part of this quadrant has a completely different mindset, okay? The employee quadrant, they want safety, they want security, they want a paycheck, they want benefits. A specialty or small business, they want freedom of choice, freedom to run their own business, to practice their craft or practice. Okay, big business also wants that freedom, but at the same time wants to help other people, provide good paying jobs, not have to pay as much taxes as these two quadrants. But it's a completely different mindset when you shift over to this side of the quadrant, okay? And on the investor side, this is ultimately where you want to get to if you want to pay no taxes at all. But it's also the hardest quadrant to get to, okay? It takes a lot of knowledge and skill. It takes a very long time to get to the investor side, where people are literally sending you money because they believe in you and they trust you, to where you can go out and multiply that money, okay? So This is where I believe military lawn cuts will be here very, very soon. It's definitely our goal to be in a big business quadrant. Big business quadrant definitely allows us to pay less taxes and provides great jobs to people, a room for them to grow within our corporation. Okay. Now, there are other key secrets of wealthy and rich business owners that all wealthy people follow. Okay. The three secrets are this. Number one, the rich don't pay taxes. Okay. And the reason why is because they're on the right side of the quadrant. Okay. They own big businesses that are producing cash flow, and they're using a lot of that money to go invest in real estate, in other businesses, venture capital type of businesses where they're funding a lot of capital and pushing that out, deploying to go and multiply that. Okay. So at the end of the day, the rich do not pay for taxes. Now, if you're in the big business column, trucks, any kind of assets that you purchase, equipment, all of that stuff's write-off. So a lot of the times the business won't actually be paying taxes unless they're actually making a profit at the end of the day. Okay, and if they do, they're going to be paying that 20%, around 20% in taxes. Now, the second secret for the rich or wealthy, business owners is the rich don't work for money. Okay, now let me break this down for you. So there's a big misconception that, people think that rich people, all they do is love money and that's all they care about, right? And that's maybe true in some scenarios, but it's not true in every scenario, okay? Most of the time, I would argue, most of the time, it's not about money. Money is just a tool for people to either serve and bless people or hurt people. Or, the saying, money is the root of all evil. I don't believe that. I think money exemplifies the type of individual that person is, okay? Just like an analogy that I would give you is with money being a tool, it's just like a shovel, right? I can use, a shovel is a tool, okay? I can use that same shovel to go and dig a pond with it and provide clean drinking water from rain to a lot of people in a town, okay? That's a good way to use a tool, the shovel. Now, at the same time, if I'm a mean person or an angry person, and I could use that same tool to go and beat somebody or to break into somebody's house and smash a window, right? It's the shovel is not the bad thing. It's the person behind it. What are their motives? What is their heart like? So to say that money is bad, that's not true at all. Money is a tool that we can use to serve and bless other people and hopefully do good in the world, to provide good paying jobs for people and all of that great stuff that we have as a good mindset of what money should do, right? But anyways, I got a little off beaten path, but basically what this is saying is business owners and wealthy and rich people, they don't work for money. They don't rely on a paycheck every week or 2 weeks or month. They don't rely on that. They hustle and they grind and they figure things out to build a business that can generate an income for them. That's what they work for. Is an asset or a business or real estate that makes them money, not a paycheck. So a lot of the times it's hard to kind of wrap your mind around it, but rich people don't go to work to try to make money. They don't do that. They go to work to build businesses, to provide jobs to people, to provide housing and real estate to people, to build a sustainable long-term asset that now they own and can hand down to their children and their generations, and to really build that generational wealth, okay? So that is one of the biggest tax secrets, or not tax secrets, business owner secrets. The rich do not work for money. Okay, last one. This is very, very, very important, okay? You have to understand the difference between what an asset and a liability is. And for very, very simple terms, I will break it down for you as basic as I can. Because if you grasp this concept, you can absolutely change your family tree and your generations and your future, okay? What an asset is it puts money into your pocket every single month. Just like if you were playing the game of Monopoly and that person lands on your spot when they come around the board, money is coming to you every single time. It's called cash flow, okay? A liability takes money out of your pocket every single month. It's that simple. An asset puts money in your pocket, a liability takes money out of your pocket every month. So let's break this down further. A lot of times people will go out and purchase a home or a house, and the bank will call that an asset. Well, to the bank it's an asset because you're sending them a mortgage check every month, and they say, congratulations, you bought a house. That's awesome. You're now moving in. Congratulations. You now own an asset. But in the real world, the way that wealthy people and business owners think is a house is not an asset unless it's putting money into your pocket each month. So let's break this down. If you buy a house, you have to pay for homeowner's insurance. You have to pay for repairs and maintenance on the house. When the HVAC unit goes out, all of this stuff you have to pay for. You have to pay for the mortgage, the principal, the interest. So guess what's happening? Money is going out of your pocket every single month. It is a liability. Now, if you were to move out of that house and move a renter or a tenant into the house, that can cover the principal and interest, cover the taxes, cover the homeowner's insurance, cover all of the repairs and maintenance, and now make, let's say, $300 a month in cash flow after all expenses are paid for. That now becomes an asset, okay? So you can really break this down with anything. Anytime somebody buys a personal vehicle, it is 100% of the time a liability until it starts making you money. And one would be like, well, it might go up in, it's a show car, or it's a nice car that's going to go up in value down the road. Okay, it's still a liability because you have to pay car insurance, you have to pay for oil changes, you have to pay for new tire rotations, all of this stuff. Money's coming out of your pocket every single month. It's not generating any money, cash flow each month. So understanding this, okay, now, and with that scenario, you can swap that to become an asset. And this is how wealthy and business owners think. It's like, okay, how do we take this liability and make it into an asset? Well, maybe you rent it out on the weekends. You can take your car. I think there's a website that you can actually rent out your car for the weekend for like some type of app. But guess what? Now it's making you some cash flow each month, and it's now becoming an asset. So to break all of this down, true business owners and wealthy people, their mindset is wired to build and obtain assets over time. Okay, that is the core focus to get into the B quadrant and the I quadrant, is how do we gain assets that generate us cash flow each month. And that could be businesses, that could be real estate, that could be startup companies. Anything that, again, puts money into your pocket each month becomes an asset. So those are the three secrets of a business owner, and hopefully this was able to help you out, give you a good visual of the cash flow quadrant. I did not create this. This is from Robert Kiyosaki. Awesome foundational mindset individual. If you haven't read Rich Dad, Poor Dad, highly recommend it. That book is probably the best business book that I've ever read. It really creates a foundation of this kind of stuff and the right way to think. So to sum all this up, the rich don't work for money. The rich do not pay taxes. And understand what an asset, a true asset versus a liability is, and that will serve you great in your entrepreneurial journey. Hope this video helped you guys out. If it did, please smash that subscribe button. It helps our channel bring you great content. If you made it down to, or if you made it to this part of the video, Other than that, if you guys got any questions, leave them in the comments below, and we'll see you guys next time.